This is the Value Investor Podcast with Tracy Reinick. All things value, all the time.
Welcome to this week's Value Investor Podcast. I'm going to mix it up a little bit and talk about an industry this week that we haven't covered at all, and it's just focused on this one industry, and that is the regional banks. Now, I own a couple of these in both of the portfolios that I manage on the Insider Trader and also the Value Investor. So they're both value stocks, and the insiders are buying them because they see value there, because this area has basically been ignored by investors since the Great Recession. And I'm not talking about the big group of banks like Bank of America or Citigroup, although those have been ignored too. And you might want to look around there for some values and deals. But these are the smaller banks that you might find in a certain region like the Southeast, or that are basically dedicated in one state like California or Texas. They don't normally have investment banks attached. That's the difference between these smaller banks and the big guys like Bank of America or Citigroup. They do all the trading, investments, and all of that. But these smaller ones are just, the good old regular banks that, we go to for home equity loans, mortgages, your car loan, if you need a small business loan, and then you're just depositing your money and writing those checks, although not many people write the checks anymore, but they just handle the day-to-day banking activities. These kind of banks have struggled since the Great Recession to make money because, as you know, the Fed has put the interest rates so low. That's been an area that's been real hard for them. But some of them have really benefited from the low mortgage rates because they handle mortgage originations at some of these banks. And though that business has really improved for them, especially this year as those mortgage rates came down near record lows again, there were a lot of refis and a lot of new home buying. And that's expected to continue, I think, through the end of this year. Even if the Fed does begin to raise rates, the mortgage rates will stay relatively attractive into next year. And it's a little delayed because if you're buying a house, you may have probably already locked in your rate now. So even if the rates start to slowly tick up heading into the end of the year, a lot of the people that are still buying and getting those mortgages will have had the older rates. So everybody thinks that the mortgage market will remain pretty good for these banks into the end of the year. But there's a lot of these banks out there. I don't know if you've ever done a screen. I did a screen and I was like, whoa, there's, a ton that fit into my value parameters, and they're all, over the regions. So how do you know which is which and which you should go for? So I did look for Zacks 1s and 2s so that I could at least narrow it down that way. And then I had, the value parameters with a low PE, and I looked a little bit at price to book because the banks go off of price to books, and I still got quite a long list. So I'm going to give you 3 stocks. I'm going to narrow it down for you that I liked. But again, there's a lot of other choices out there. So you could be looking, and none of these 3 are in either the Insider Trader or the Value Investor. I have different banks in there. So you can see that there's a lot of different choices. I'm also going to give you 3 different size banks. None of these are the really big guys, like I said, but they're kind of small, medium, and large. And that'll give you an idea of basically what's out there. There's also actually micro-cap banks. Those are even smaller than these ones I'm going to give you. It's kind of hard to believe, but those, I would say, have market caps of like 20 million to 50 million. And some of those do trade, and you can get into those, but, it's not going to be very diverse for your portfolio if you're buying a really small bank like that. You might want to buy it if you're really familiar or if you're a customer at a bank like that. Otherwise, you need to buy a whole bunch of them to be a little more diverse. And some of those small guys are really acquisition targets right now. These slightly bigger banks and these medium-sized banks are gobbling up some of their smaller competitors to increase their diversity and their geographic reach. So you could be in like a buyout opportunity if you get in some of those small banks. But I'm going to start with the smallest bank that I'm going to talk about, and this has a market cap of 170 million. So it's pretty small. It has 23 branches, and it's called Central Valley Community Bank Corp. The ticker is CVCB. And this is in California. They, just do the normal banking. They are basically from Sacramento, down south along I'm quoting off of their site here, like the Highway 99 corridor, if anyone's familiar with that. So because they're kind of in the middle of the state, they deal with a lot of agriculture. So with the banks, you need to be aware of what their business model actually is, who they're servicing, because those industries, if something were to go wrong, could cause problems at the bank. So for instance, if you're looking at Texas banks, you have to be aware of who's loaned money to which oil company, which a lot of them have. That's why I'm kind of staying away from the Texas banks. Similarly, Puerto Rico banks may have some issues given all the financial issues going on in Puerto Rico. So you might want to stay away from those. California, this bank, Central Valley, has a lot of agriculture exposure, and with those drought possibilities out there, there could be issues there. But for right now, there is not. So their loan loss ratio is good right now. They just acquired another bank, Sierra Vista Bank. They're in Sacramento. They only had 3 branches, but they had assets of $156 million. This will give them more exposure in Sacramento, which is a bigger market. So the analysts really like this acquisition. They actually pay a dividend, which is somewhat unusual for a smaller bank of this size, but it's giving you something to hold on to because you are taking more risk with a smaller bank. So that dividend yield is 1.6%, which isn't super huge, but again, at least you're getting something for taking the risk. They have a PE of 11.6 and they're a Zacks number 2. So this is really on the very small end, and you have to pay attention to what's happening in the California economy, especially the Central Valley and out there in the agriculture lands if you want to be in one like this. Moving up to a slightly bigger area, but staying on the West Coast as well, is a bank called Home Street. Their ticker is HMST. Anyone in the Seattle area would be familiar with them. They are headquartered in Seattle, and then they operate in all of the Northwest and also Hawaii. So they are much bigger with a market cap of $623 million. They also handle the mortgages, the private banking, construction loans. Their big areas of business have been in mortgages, which was really strong in the second quarter, but also their commercial and consumer banking was strong. Their organic loan growth in the second quarter was up 5% quarter over quarter, which the analyst said was one of the strongest of the last 12 months. So they're starting to see stronger commercial loan growth. That's what you want to see in banks and also in the economy in general, because that means, people are out there starting new businesses and taking some risks, and that's a positive. So the mortgages used to be a bigger part of their business. It's now about 50-50 with the mortgage side and the commercial loan side. So that's going to be important for when mortgages do actually slow down. If those rates rise enough, mortgage originations will slow. But again, I don't think that will probably happen until 2017. So for right now, you're looking pretty good there. They do not pay a dividend, even though they're bigger. So you're banking just on the growth here. Their PE is a little over 10.1, which is below like the peers of their size. And they're also a Zacks number 1 rank. So I'm going to like that. So if you're looking for kind of like that mid-size bank, Home Street is one to keep on your list. And then going to slightly bigger, this is a bank that's in Michigan. It's called Flagstar Bank. This used to be in the Insider Trader, actually, but we had a nice gain in it and we sold, but I still like it. The insiders were buying a while ago, about 6 to 8 months ago. But they knew what they were doing. They're in Troy, Michigan. So you might think, oh, Michigan, what could be going on there? But despite all the negative sentiment about that state, it's actually well on its way to recovery and doing well. So when that happens, the banks in that state do well. So this is one of the largest banks in the state of Michigan. They have 113 retail banking offices, and they're one of the top 10 originators of mortgages, like in the country. So again, we got the mortgage play here, which should still be good. And And those mortgage loan originations were actually up 31% in this last quarter. They have a market cap of $1.5 billion. So you can see we went from the California bank that had a market cap of only 170 million, that's Central Valley, to Home Street, which is around 600 million, and now Flagstar at 1.5 billion. Flagstar's ticker is FBC. They have a PE of 11.8. They're Zacks number 2, and they also actually do not pay a dividend, which is a little bit unusual, again, there for a slightly bigger bank, but you're buying just the growth here. And the analysts do believe that the bank, despite the shares being up considerably over the last year, that these banks, actually all of them, have a nice growth trajectory, especially as the economy remains as hot as it has been. So that's something to watch. A lot of them should benefit as the Fed raises the rates, at least on one end of their business. And then the mortgage side, if they raise it enough, will eventually hurt the mortgage side. But for now, it's not going to be enough. The rates are low enough on the mortgage side that consumers will still be taking out those loans pretty generously here, like I said, into 2017. So these are just 3 options. Like I said, the value investor portfolio and the insider trader both have different banks than what these are. And you don't rule out the largest banks. I would look at those, but those are like a different kind of animal because they have different exposures. And then there's also larger regional banks than these that are, close to the big guys, I would say. And those are ones with, over $10 billion assets under management. You get to a new regulatory level once you reach that level, and they would have branches in many more states, maybe even an entire region. And I think a lot of us know what some of those banks are. So I like the whole sector. I think it's undervalued, and I think people have been ignoring it for a long time. So this area really excites me as a value investor. I can't believe I'm saying that about the banks, because I did avoid them for many years because of their problems and, regulatory issues and all of that. But now's the time to look at these areas that everybody hates or is just ignoring, because that's, where you find the value. So, like I said, I really like the banks. Definitely dig down into what their area of business is, because each is very regional. That's why they're a regional bank. And they will rise and fall based on what is happening in their economic region and what kind of businesses are headquartered there, and, who they're loaning to. So be sure to check out all that. And if you want to know any other value ideas, of course, check out our other value podcasts where we just explain, I talk about what is a value stock and how to find them. And as we move forward, I'll be talking more about different industries and areas where I feel the cheap stocks are located, because they definitely are out there. So until next week, I'll see you then.
Listeners of today's program might have an interest in value stocks similar to those Tracy shared today. If you'd like access to her Value Investor Portfolio service, which includes real-time buys and sells, market insights and commentary, visit www.zacks.com/valueinvestor or call toll-free 1-888-775-8348 between 10 a.m. and 6 p.m. Monday through Friday. Outside the U.S., call 1-312-265-9309. Again, that's www.zacks.com/valueinvestor or toll-free 1-888-775-8348. Outside the U.S., 1-312-265-9309.